Hey, I'm Zach McDonald, your real estate agent with Real Property Associates, and I'm here with Dan Keller, branch manager, mortgage advisor with Guild Mortgage, one of the best in the Seattle area, and he's helping us answer some of these mortgage-related questions. And this question I've got for you, Dan, this is a fun one. What types of mortgages are available?
Good question. All right, so there are a lot of mortgages available. Let's just start from the ground up. There are zero-down mortgages, specifically designed for first-time home buyers, okay? And when I say zero down, these aren't the mortgages that contributed to the last housing crisis. They're very, very, I don't want to say difficult to qualify for, but you have to jump through a lot of hoops. You need to take a home buyer class typically. You've got to have, a little bit of, you got to have some kind of reserves and some collateral, if you will, to offset the zero down, okay? So there are a handful of zero down loan programs. One of those, which is not an entry-level loan program, is the VA home loan. That's a specific program that gives incredible benefits and discounts, if you will, to men and women that have served in the armed forces or are currently serving. So
great program.
Great program, big part of my business. I have a huge heart and a big team to support our veteran clients. As we move up, the next tier you're looking at, there's a couple of 3% down loan programs, one backed by Fannie Mae, one backed by Freddie Mac, and then you've got the 3.5% down FHA loan, really common loan program there. And then as you migrate up from there, you've got the Fannie Mae 5% down conventional loan program, and that's the loan program that's kind of hitched with the standard 30-year fixed rate loan program backed by Fannie Mae or Freddie Mac, where some clients will put 20% down or 30% down. So they're really the only differences between putting 5% down and 20% down on a program like that is the private mortgage insurance factor that's included with that. And that's basically a small insurance premium you pay the lender for not putting down 20%.
Okay. Can you, for somebody that's a first-time home buyer, doesn't really know very much about mortgages, can you answer just, what's a conventional loan? That's one of the loans you'll hear, and terms you'll hear thrown around.
Yeah, so I think the best way to answer that would be to explain what a government loan is first. So like a VA and an FHA loan. So HUD developed an FHA loan after, in the 40s, where soldiers were coming back from war, and it was a program that allowed people or encouraged home ownership, right? And so the guidelines were centered around helping these young men that were coming out of war buy a house for their family. And so, you fast forward, 80 years, 60, 70, 80 years, FHA is still around. It's one of the top loan programs. It's government backed versus a Fannie Mae or a Freddie Mac backed loan program, which Fannie Mae is the #1 insurer of mortgages right now in the United States. And so a conventional loan program has more, if I were to explain it in a nutshell, more streamlined, less strings attached, non-government backed loan program. More emphasis with a Fannie Mae loan or a conventional loan is placed on credit score and down payment versus with a government loan, less emphasis on the interest rate is based on the down payment or the credit score that you have.
Cool. Thanks again for tuning in, and thanks again for coming on and giving us some of your time. If you guys like Dan and you want to subscribe to his channel, we'll link it up down below. You can also find him by searching Dan Keller in YouTube. And again, of course, if you like these videos and you want to see more like this, please consider subscribing to my channel as well. Thanks for watching.